It's time for your call sheet, though. Crew members today, Miller Tabak, Chief Market Strategist Matt Maley, and Blanke Schein, Wealth Management Chief Investment Officer Robert Schein, and back with us, our own Stephanie Link, or I guess I shouldn't say our own, but Stephanie Link. Okay, we're just going to go to the wall with markets. And Robert, I'm going to start this with you, and that is what we're seeing with SpaceX, what we're seeing with AMD. I'm going to kick it off with SpaceX, though, because actually overall, I thought the print was very strong. The commentary was very strong, but obviously spending is very aggressive here. It seems like it's a show me story. What I think investors need to understand is that SpaceX is not Tesla. They tend to hit and execute pretty aggressively and pretty much on target, all things considered, knowing that space is hard.
Well, I was just as surprised as you were to see, they lost less, right? And the reason why SpaceX is down is simply because they're spending more. And it's all about the scalability story, but it's really the global communication infrastructure, that story that we heard last night about the SpaceX Mobile. I mean, the total addressable market for that is absolutely unbelievable. So that's where the scale is going to come through moving forward. But, the growth of revenue is, something not to shake your head at.
Yeah. And Matt, I want to get your thoughts on this, too. You got a stock lockup expiration. The first tranche kicks in tomorrow. The selling in SpaceX is accelerating here. But in general, when you think about how spring-loaded this market has been in both directions, your thoughts?
Yeah, Morgan, this move in SpaceX and in Advanced Micro is a little bit concerning. Obviously, we've seen an unbelievable bounce, but you worry a little bit about that. This whole thing with spending. That remember how Google, they reported really good numbers, but the spending was up, and so the stock got hit. And are we going to get back to that? Because we bring in Advanced Micro, and you saw what happened in the chip stocks. Since the earnings season began, it was Broadcom, Micron, Samsung, Taiwan Semiconductor, Intel, Texas Instruments. They all, most of them reported very good numbers, good guidance, and yet the stocks went down. We're seeing the same thing here. So this concerns over spending, the concerns of what the sell the news from the chip stocks. If that resurges or reinserts itself, we could see a reversal back lower. But right now the bias is with the bulls, and we'll see if this continues.
Okay, Stephanie, want to get your thoughts on this. So we take a little bit of a breather here. For what we saw the last 2 days in the markets. I mean, the Dow, S&P, Russell 2000, all at record highs. And it's not just about tech. It's about some of these other companies like Caterpillar yesterday, for example, that are benefiting from AI tech build out.
Yeah, we've talked about the AI food chain for years, and it's coming to fruition. We are seeing a lot of the industrial companies benefiting from all of this CapEx spend. I mean, if you look at companies like Quanta Services, GE Vernova, Vertiv, Eaton, all of them had astronomical order growth and backlog growth. And that means that there's a lot of visibility for those names as well. But just stepping back, earnings in general are very strong. We're running up 58% earnings growth with 15% revenue growth and 250 basis points of gross margin expansion so far in this quarter. And that's about double what people were expecting, myself included. And it is broad-based. Yes, it's tech and comm services, but it is also energy, materials, industrials, and healthcare. And so that's really exciting. I think the other thing that's really surprising, Morgan, is that the Atlanta Fed tracker that came out this week, we're at 5.9% GDP growth. And that speaks to, again, this whole AI revolution.
Want to get your thoughts on that, Robert. By the way, you two are friends. You two go back out here. You're colleagues.
Very much so.
I love when that happens on the call crew. Yeah. So I do want to get your thoughts on that, especially we're going to get ISM services read today. And we also get more consumer-facing stocks reporting as well. I mean, there was Mickey D's yesterday. I mean, today you're going to get things like DoorDash and you're going to get Uber and a number of others as well on the consumer side. Your assessment of that piece of the market.
We will also have the jobs report on Friday. Let's not forget about that, but let's not fast forward. That being said, it's all about the AI spend, as we said earlier. And the question is, as long as if you look at companies like Microsoft, if you spend and you preserve your free cash flow to an extent, you're going to do just fine in this market moving forward. AI is the story. The spend is there. It's also going to produce tremendous profitability moving forward for all these companies. They can't afford not to.
Yeah. Okay, so let's jump forward. Labor data. What are you looking for, Matt? How much does it matter to this market when you still have yields, Treasury yields that are elevated? We've come off a little bit here. We have energy prices that are elevated. And then, of course, we are focused on the other piece of the Fed mandate, which is inflation.
Right, Morgan. It's interesting to see to have seen what happened last week with the reaction to Chairman Warsh's press conference, where everybody was saying, well, because the market reacted poorly, or the bond market, therefore he needs to change what he's doing, and and he's to adjust. My feeling is that we have to adjust to the way he wants to change the way the Fed is going. With interest rates remaining high and some concerns that he is going to be, more hawkish than people have been thinking in the past, or the Fed overall is going to be more hawkish. The employment point is going to be even more important than it usually is. So, it's no question that interest rates have remained higher. The highest levels are close to the highest levels in 18 months, and since 2007 in the 30-year note. So it's going to be very important, because if we see yields start to push up again, it is going to create headwinds for the stock market at some point.
Yeah, Stephanie, it seems to me it's earnings, it's economic data, and then it's geopolitics, probably in that order in terms of what investors are focused on. Is that the right way to think about this moving forward? Is there anything that changes that?
No, I mean, I think that we all know that stocks follow profits on the way up and on the way down. And over the last 3 years, we've seen massive revisions higher, and we're seeing again higher this year. And so that's very encouraging. And it does speak to the strong economy. It does speak to the broadening out. It's not just AI, Morgan. It's also the consumer. The consumer continues to consume. And on the labor market, I have no doubt it's going to be a strong number. I don't pay that much attention to the non-farm payroll numbers. I pay more attention to the weekly jobless claims, and they're the lowest level since 1969. So we have a good labor market. People are spending, and it's not just K-shaped. So I think there's a lot to be excited about. I think the market inches higher throughout the end of the year.
Okay, and we'll see what it does in the meantime today, with the S&P and the Dow both poised for gains, but the NASDAQ under pressure pre-market. Thank you to our morning call crew. Squawk Box starts now.
Blanke Schein Wealth Management is a group of investment professionals registered with HighTower Services, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanke Schein Wealth Management and HighTower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanke Schein Wealth Management and do not represent those of HighTower Advisors, LLC, or any of its affiliates.